So we're just here to talk a little bit about Bright Union. So I have, like I mentioned before, I have recently invested in Bright Union. I really like the look of this project, and really I just want you to just give me a little bit more about it, just explain a little bit more about how it works, and also about yourself actually, Stephen, because I don't really know much about you.
Yeah, so I'm Steven, product lead at Bright Union. I have a background as strategy consultant and product owner in the insurtech space. A year ago, I was called by Curated and Michiel, our founders, whether I wanted to join the team. So our journey really started in February 2021, and then in August I left my full-time job to fully dedicated to Bright Union, and we launched our app we launched our token in August. We launched our app in September, which allows you to buy insurance covers for your crypto assets. And last week we released the Bright Risk Index, which allows you to very efficiently invest also in DeFi insurance risk.
Right. Okay. Were you in insurance before then?
Yeah, I was in healthcare. So
Okay.
I worked for a company called Curated, where we made a platform in Africa where the insurers, the hospitals, the government, and the patient all log in and manage their healthcare journey. So from that angle, I was involved in healthcare insurance.
Right. Okay. So you bring that experience into this project then?
Yes, exactly, and the IT experience.
So is the team mainly made up of people from an insurance background, or is it a mixture?
Yeah, it's a big mixture. So of our two founders, Kirill is the die-hard IT guy, and then Michiel was actually the founder of CarePay, and he was the CEO of an insurance company, or an insurance broker. So there, the expertise came together, and then we have a marketing expert, legal expert, and financing expert, and that's the core team. And then we have like a big group of tech, data, operations, customer care, which also support us.
Right. Okay. And you mentioned you launched that Bright Risk Index recently, and from my understanding of it, I'm going to ask you to explain it, but it looks like an amazing product that is really well needed. So can you just explain perhaps a little bit what it is? And I know you have a light paper and there's a really fancy diagram, so I'd love it if you could just take me through that diagram, and just so I can understand it a little bit better.
Yeah, exactly. So maybe to start with the basics about DeFi insurance. So DeFi insurance, you insure yourself against your assets being hacked. But another innovation is that it's not underwritten by an insurance company, but by the community. So the insurance players only define the smart contract, and anyone can provide the capital and earn. So I can put my capital to the risk that Uniswap gets hacked. I get paid the insurance fees, and if they get hacked, I need to pay out. And what we were thinking is that two things. One, like most DeFi users don't have the knowledge to know which of these protocols are more risky than the other. And the other one is, you also don't want to take the time to find that out. So we are going to make one investment opportunity which invest in the right risk pools. And the secret of doing that successfully is what insurance companies do, is that if you take not only one risk, but hundreds, and then you get the best risk return ratio, and that's the product we are offering.
Okay, so you're basically so let me just explain that. You're getting you're providing coverage to a lot of different pools, sort of risk pools, and users such as myself are acting as the actual insurance provider by providing our capital, right? And it's been
Yes,
spread out in a lot of different risk pools by different crypto insurance companies, right?
yes, exactly.
Right. Okay. All right.
And we make it easy for you. So let me explain the mechanics a little bit. I think this is a nice overview. So you're the user are here in the top right. So you will deposit your funds, in this case DAI, into the entry pool, as we call it. And this exists already for the first benefit, and that's that normally to invest in the insurance pools, it would cost like $500 to $700 in gas cost. And what we do here is that all the users can invest for maybe $30 to $80, like the same amount that sending your funds will cost. And then on a bi-weekly basis, the DAO will trigger the staking from the entry pool in the different risk platforms.
Okay, so is it possible we could like perhaps expand that diagram a bit more? Is it? I'm just wondering if we could just zoom in on it so we can see exactly how it works.
Yeah, exactly. So here, this is the entry pool I'm talking about.
Okay.
And then from here, like every 2 weeks or whenever there's sufficient capital, we stake it with the insurance platforms. These are Risk Mutual, Nexus Mutual, Insurace. And as you can see, we stake it in many different assets because that's the assets they require on their end. And we are making explicit strategy to do most of the investments in the risk pools in stable coins, because we feel that the more professional and experienced investors are really looking for that. So they're not looking to expose themselves to FX risk of these platforms, but they want a return on their stable coins.
Right. Okay. So, for example, for Bridge Mutual requires USDT stablecoin, and you stake it in the risk pool, and then as a reward, you get what do you get? I can't see that. Is it USDT and
you get both USDT and their native token BMI,
okay.
and that's what you see with all these three platforms, that they do rewards in their native token. But after we did a lot of interviews with potential investors in the Bright Risk Index, we find out that like the more experienced guys, they know that high APY don't mean much if it's in an inflationary native token. So what we do is that every 2 weeks, or whenever it's necessary, and we collect the rewards and reinvest them again into the pools. So this is another operational hustle which we take out of the hands of the investors, and we do it for them.
Okay, so in that diagram, so the blue bits, the three boxes are the risk pools, and then the rewards, they get translated to the rewards, which go back into the withdrawal pool, and then they get reinvested back into the entry pool once more, where the cycle continues, right?
Yes, exactly.
Right. Yeah. Okay. That makes sense. And just with regards to the proportions of, the investments, how much is it equal 33% in all risk pools, or is it split differently?
Yeah, it's split differently, and there is two important metrics we select on. One is that we give prevalence to stablecoins. So you will typically start seeing that Nexus Mutual we invest less in because it's based on their native token. And the second one, of course, it's the risk reward ratio, what we look at. And that one is heavily driven by the need for capital of these platforms. And you can currently see that the APYs at Insurace and Bridge they are a bit higher than Nexus because Nexus has a lot of capital already, and so that's also skews the investments more to the platforms which need the capital.
Right. Okay. So I've noticed as well, insurers tend to have a lot of coverage. They have a lot of risk pools, don't they? They're
Yes.
covering a lot of protocols. So are you tending towards insurance more or at the moment, or
I don't think we
depends?
tend to towards any of the
Okay.
platforms more. We really look like at the risk reward ratio
Right.
of the underlying pools. And
Okay.
at
Right.
any point in time, yeah, another one can get ahead.
Okay. And that varies between the different insurance cryptos. Okay. All right. And how often? I think, did you say once a week into the entry pool, or?
Yeah, so it will depend a little bit on how quick it goes and how big the TVL is. So what we will do, and we know that some of these transactions cost like a few hundred to $1,000 in gas costs. And so we do analysis of if it already makes sense to reinvest the rewards because you're not paying $400 in gas cost if the rewards have been $300, for example.
Okay, so would that, the actual sort of low amounts of gas costs, would that be one of the reasons I should go into the BRI token rather than go directly to the individual crypto providers? Just explain
Yes,
some of the
exactly.
benefits. I know you kind of sort of touched on them anyway, but
Yeah, and that's like theoretically that's the difference between the APR and the APY. Like if you invest yourself in insurance, either you need to come back yourself and every 2 weeks reinvest your rewards and pay the gas for that, or we
okay,
do it for you and then you get compounding returns.
right, okay. So, but with this BRI token, you could do it for us, right?
Yes, exactly. We do it. We do it for everyone because then it's efficient. Because the blockchain doesn't really care if you claim $10 worth of rewards or 10,000.
Right, okay. And also because you're the experts, you will select exactly what pool, the best risk reward sort of ratio so that, we get the most reward for the least amount of risk. Is that basically what you're doing with a BII?
Yes, exactly, and we will organize our um, Discord channel so the DAO members have a say in this, so that we can refine their strategy with them.
Okay. So if I, for example, I'm a Bright token holder, so I could have a say in this, in the strategy at some point if I want to, if I feel I'm qualified to, right?
Yes, exactly.
Right. Okay. And how does the actual, one of my questions again that I had going around in my head is how the BRI token relates to the Bright token. So the Bright token is the one, that I purchased. I was, the main sort of DAO governance token. How does that relate to the Bright Risk Index token?
Yeah, exactly. So the Bright token is our company's token. So this represents like ownership in our DAO. This helps you with the voting. This helps you to get rewards. You will get like loyalty status, which gives you discounts on your covers, for example. And the BRI token really represents the capital invested in the insurance protocol. So what we call your BRI token, it's now on $88. That means that every BRI token you hold has $88 invested as per this diagram in these insurance platforms.
Right. Okay. So say that once more, because so the token value is $88 at the moment, right?
Yes, exactly.
And that
And
represents $88 worth of investment into all the risk pools.
Yes, exactly. So it's 88 is not the market price. So what we do is, you see in this graph like all these little piles of coins. So what our contract does, if you ask how much are you worth, it will count all these different piles of coins, checks, converts it to DAI, and then gives the value to it. And when you withdraw from the pool, you will get exactly that amount of tokens back.
Right. Okay. And the actual BRI token is once, so once I put in my DAI, I get some BRI token in return, right? Because I haven't actually gone through this process yet, so I'm just clarifying myself. So I invest some DAI, and the minimum is 1,500 DAI, right?
Yeah, so we lowered now the minimum to 1,000
Okay.
DAI, and so you put that in the entry pool, and once it's being staked, then you get your BRI tokens.
Right. Okay. And once I have those BRI tokens, do I just hold it in my wallet? Is there something that I can do with them? I don't know. I'm just curious.
Yeah, exactly. No, for now you just hold them in your wallet, and we are thinking about like new ways to giving it more utility. But as you are now know, we just launched it last week.
Yeah.
We are in early access mode. Um, and then more utility might be added later to it.
Okay. And how do you, just curious, how do you see the BRI sort of token in its future? Like, because for me, this sounds absolutely amazing to be able to, invest in different sort of insurance providers, crypto insurance providers, in the best sort of risk reward ratio that you could get. So it seems very safe. It seems, very profitable as well. So from an investor's point of view, it seems an excellent opportunity.
Yeah, exactly, and I think that's exactly what it is. Like if they now give more than 30% return on your stable coins, which is backed by a real business model. And I think that's what sometimes in DeFi is missing. Like borrowing and lending is great because there's a real business model there. But of course, there's a lot of inflationary yield farms there, which just throw around some of their own tokens. Mm-hmm. And here you are actually earning the insurance premiums somebody at the other side is paying.
Yeah.
So that's why it represents a real business model, and the price of DAI of the BRI will always be going up until the moment where there might be an insurance claim and some of the capital is used. But because we diversified it over all these pools, that risk will be limited.
In the future, obviously at the moment you're solely to do with crypto insurance. So what are the plans of perhaps integrating this Bright Risk Index with actually real world insurance, either scenarios, for example? Is there any plan? Because I know you started with a partnership with 180 Protocol, I heard.
Yeah, exactly. So that is one of the parties we are working with. Like what I think is the magic about DeFi insurance, like even when crypto became like a hype in 2017, like the big insurance jumped onto it with like parametric insurance and insurance for farmers in India and all these beautiful use cases, but actually nothing really materialized. What actually Nexus has really pioneered is the DeFi insurance of your DeFi assets, which is brilliant because it solves a problem of people already in crypto, which understand the benefits of decentralization. So you didn't have to explain people why you have your insurance on a blockchain instead of just on a server. And now we're talking $1 billion industry. So that's why the focus for the early this year will still be here. And then also with the connections of our founders, we will start involving some of the real industry players like the bigger insurers and reinsurance companies, and a product like this would be very interesting for them, because it will allow them to learn and to get data on underwriting on the blockchain.
Are those the kind of conversations you're starting to have now, or are they the kind of conversations perhaps you're looking to have in the future?
Yeah, those are more the conversation in the future. And then
Okay.
and future in crypto terms is like 6 months to 12 months. Like, yeah,
Okay.
because we're first doing the next iteration on this. We're gonna connect to some more change like Avalanche. We're gonna connect some new partners, and then we're gonna broaden the horizon beyond DeFi.
Okay. I'll be honest with you. I don't know anything about Avalanche. I hear it's a very good chain. Why Avalanche?
So because we are the aggregator, we are
Okay.
following where the insurance protocols are going.
Right.
Insurace has gone to Avalanche, which is soon launching also a few new chains. So as they add new chains, we will make sure our users can buy the insurance there. And if you use our app, you can see it's like fully multi-chain, like how in many of the DeFi apps you need to change your wallet and you only see the data from that chain. Like when you use our app, it doesn't even matter on which chain you are.
Right. Okay. I also heard, I remember listening to one of, either if it was a podcast or YouTube channel, what Bright Union wants to do is actually make adding insurance into the process when you actually invest in a yield farm or invest in a protocol. You want to make it, perhaps like automatically, as soon as they invest in a protocol, add insurance in that.
Yeah, I think that's one of the products I'm personally very excited about is the integrations. Because as a user, you don't want to two times think about this. Like one, you go to Anchor to stake your capital there, and then you need to go into an insurance platform to then buy the insurance for it. What you want is if you put your money in Anchor for 100,000, at that same transaction you want to have 100,000 of insurance, which also ends when you take your money out again. And so we developed an aggregator contract so our partners can integrate on chain, and also a JavaScript software development kit. Any DeFi wallet can integrate with us and embed the insurance in their customer journey. So the first party to do this was Donkey Finance, which is an asset management company. We have a second large party, which is now under development, which we will release soon, and a lot of conversations ongoing. Because you can embed insurance with just 3 lines of code.
Right, and it's as simple as that. You just 3 lines of code, put it in there, and there's Bright Union.
Yeah, exactly. You can see it as like the Stripe or Agent of insurance. Like what they do, if you have like a web shop, you use their functionality with 3 lines of code, and you are connected to all the banks in the world and all the credit cards in the world. Like with us, with 3 lines of code, you're connected to all the insurance players.
I mean, to me, what you're telling me, this is going to be absolutely huge. It's eventually. I mean, at the moment, I'm very surprised with all the hacks that have been going on. Why the insurance sector isn't? I mean, we all know how big the traditional insurance sector is, but why the DeFi insurance sector isn't much larger than it is now? It's just such a huge opportunity to get into it. So, yeah, and you must
We're
see that.
very much more into JPEGs and gaming than into something boring like insurance, Daniel.
You say that, but I mean, you have created an amazing, from my point of view, an amazing project that's at the very beginning. So
exactly. We are very excited about it, and we're just building on, and I think we have a very good tech, we have a very good product, and the growth is bound to come when this industry is gonna grow. But if you look at us, it's all fully decentralized, and we're trying to stay as close to the principles which the Ethereum ecosystem should uphold. And I think that's the way to go to have long-term success.
Yeah, I mean, what I also, you mentioned it already about Bright Union, that I really like is that it follows a proper business model. And I remember back in the early .com boom, there was loads of sort of websites springing up, but not all of them had a proper business model. They just thought they just create something without any proper, thinking behind it. And this, I think this is probably happening a lot with crypto at the moment, isn't it? And those projects which have a vision, a professional team and investors and a business use case are going to be the ones that succeed. Actually, there is one question that I wanted to ask you as well. In case of a bear market, what kind of protection does Bright Union have in case there is a bear market? How will it be able to I mean, of course, I'm sure it'll be able to survive, but what kind of thinking has gone behind that?
So actually, our thesis is that DeFi insurance and especially the BRI will thrive in a bear market. So one is big because fundamentally people will move more from trading to yield farming, and of course that you want to insure. And the other thing is that as other earning opportunities dry up, here you have like a stablecoin opportunity which is not exposed to FX risk to keep earning you a return. And so I really feel if everything is going to the moon, people buy less insurance because they make a lot of money. And if the market is a bit more realistic, like this becomes an even better opportunity.
Okay. I'm going to end with one final question. Do you think that 2022 is the year for DeFi insurance, or do you think it's going to be? I'm just asking you to gaze into your crystal ball and predict something.
Yeah, exactly. 2022 and 23 are going to be the growth of DeFi insurance. Now, what I really see is another trend, which I think you can read anywhere, is that big institutional money is coming into DeFi, and any of the partners or the custodians we talk to, they say the institutional players, they ask for insurance. Like the crypto cowboys don't need the insurance because they used to losing money. The big custodians with the big institutional investors with investors behind them need to show that they are mitigating risks. So based on the trend of the institutions coming, I'm not afraid to say that 2022 is going to be big for DeFi insurance.
Yeah. Okay. Great. Great point
Great.
to end.
Thanks, Daniel.
Steven, thank you so much for taking the time to speak and to just going through that so eloquently. That really helped me too. So
great. Thank you, Daniel.
all right. Take care of yourself.